think the bullion banks, the swap dealers, if you want to call them, they're short quite a bit, and they're trying to fight the market. But I think we're going to continue to see the market move higher. Things are very tight, and a lot of physical silver is being drained from the London Bullion Market Association, or LBMA. I think the next target could be in the mid-40s, and we could see that quite soon, I think.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 14th through July 21st, 2025, while supplies last. This week, we'll swap any silver bars you have into junk silver at just a 2% fee. That's right, any silver bars or rounds that you have. We'll buy back at 2% under spot and swap into junk silver at spot with the proceeds. It's a quick and easy way to move from large quantities of bullion into junk silver at the lowest cost in years. To order our specials or any of the many other options we have available, call us at 1-888-815-4237. That's 1-888-81-LIBERTY. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Mario Innecco from the Innecco 64 YouTube channel. Mario, thank you so much for joining us today.
You're welcome, and thank you for having me, Elijah.
Well, it's great to have you today, and it sounds like you're back from vacation there in Switzerland. I was seeing you with your camera walking around there. It looked like a beautiful spot you were staying in.
Yeah, it's beautiful up there in the mountains. It's like paradise almost. Yeah.
Definitely. And a lot of was happening while you were gone there. Silver shooting through, 39, now coming back to about 38 here. Your perspective on what we've seen in the silver market, and I know you've talked about how kind of silver can be, if we see a spike in silver, this can be an indication of the health of the financial system.
Yeah, it might sound a little bit exaggerated, but if you look back at history, silver has always been the money of the people. It has been like taken away or demonetized since the mid to late 60s in most Western countries. But I think that if you look back at 1980 and 2011, you had two major crises there. The first one was the dollar crisis. As some people probably don't remember. I don't remember it, but I've read about it that in the late 70s, like 78 and 79, the U.S. Treasury issued what they called Carter bonds. They were U.S. Treasuries denominated in Swiss francs and Deutschmarks because no one wanted dollars. So yeah, in January 1980, yes, the Hunt brothers did try to corner the market eventually, and the regulators stepped in and stopped people from going long silver, and it stopped that speculative move in silver up to 50. But Paul Volcker was the chairman of the Federal Reserve, and I've read that he's commented after the event that there were some brokerage houses that were in trouble that could have gone under. It could have brought probably the whole banking system under, and eventually, he had to allow short-term rates to go to 20% a few months later, or back in 81, 10-year Treasury yields rose up to 15.5%. So yeah, I think silver was like the canary in the coal mine, so to speak. And in 2011 as well, when we almost touched 50, that was right at the beginning of the sovereign debt crisis in Europe, of the PIGS, which was an acronym for Portugal, Italy, Ireland, Greece, and Spain. And eventually, in the summer of 2012, Mario Draghi, the president of the ECB, he came out and said, we're going to do whatever it takes to save the euro and stop this sovereign debt crisis from spreading. And whatever it takes, of course, was money printing. It wasn't raising rates like Paul Volcker did in 1980, because nowadays, Elijah, there's so much debt in the system that you can't raise rates anymore to solve a crisis. You've got to cut and print more.
Then what does this mean for the financial system if we see silver spiking again, really signaling a crisis, but we can't raise rates to the necessary levels that would solve the issue if the debt is so high?
Yeah, that's the problem nowadays. The debt is so high. Raising rates doesn't solve anything. They raised rates in the 80s to bring back investors into the dollar. They did that in 1992 here in the UK as well. When the pound collapsed, they raised rates to try to attract investors. They reversed those hikes very quickly. But nowadays, the system is so leveraged that they have to keep. Well, they'll have to cut or print more. And what a move towards 50 or even above 50 in silver, which I think is highly possible, would signal as a crisis. I don't know. We will find out. I think it will probably be afterwards, just like it was kind of in 1980 and in 2011, or it could be concurrent as well. And what could it be? Well, you were asking me about the Japanese government bond market. It could be that. Japanese long-term government bond yields have been spiking massively in the last 18 months. They've gone from being near zero and sometimes even negative, like in the 10-year, to now being 1.6 in the 10-year and above 3% in the 30 and 40-year. In Japan, the Japanese government debt to GDP is like 250%. And I've even read, Elijah, that rice prices in Japan, they've doubled in the last year. And that's like a staple of their diet. So the Japanese central bank, the BOJ, is really between a rock and a hard place, because they can't really cut, because their CPI is running like at 3.5–4%.
And in the U.S. as well, I mean, we have the official numbers, but even Powell has talked about how many are expecting inflation to be higher in the coming months. So it really, as you mentioned, the Fed is stuck between a rock and a hard place. If they raise rates, then that means trouble for the U.S. debt and for the economy. If they lower rates, we see more inflation.
Yeah, and if the Fed can lower the short-term rates, they can influence the short-term rates by lowering the Fed funds target, but it might actually make the longer end spike. And I think that's what Powell is concerned about, because ever since the Fed cut rates back in September of 2024, September 2024. It's just that it was September 18th, and that's why I got confused. They cut rates by 50 basis points, and they cut again twice. The 10-year yield has gone from 3.6 to right now, as we speak here, we're at 4.42. So if anything, it could actually hurt the longer end. Investors might be spooked. And why is that? Well, I think, Elijah, it's because you've got the stock market at all-time highs. You've got a lot of commodities, gold and silver included, at all-time highs. The economy is not really in a recession, even though it's slowed down. It's still doing well. Wall Street is ticking along. So to cut rates right now would be like, throwing more gasoline or, petrol into the fire. And coupled with the debt situation and the deficit, that wouldn't help. That wouldn't help the finances, and it would probably drive actually the U.S. into a recession.
No, I wanted to get your perspective in particular about the rise we've seen in silver recently. I mean, as we've had you on about once a month, we've been talking about this, but it seems like it's really in the last month or so come into new, I guess, decade highs, 14-year highs or so in silver. What do you think the significance of this? Obviously, you're talking about the what it signals for the financial system, but just on like for the silver market itself and on a technical view, what do you think the significance of these recent moves are?
Well, they're highly significant. The 35 level was like a really big resistance. We tried to break through there twice earlier this year and it failed. And as you said, it's like almost 14-year highs. And there are a lot of speculators and traders who use these momentum, these breaks of very long-term levels as a way to get into the market, and they push the market higher. I think it's called the turtle trading system, which was devised in the 80s by a hedge fund trader called Richard Dennis. And he looked at 22 and 55 day levels. If you broke new highs or new lows through 55 days, it was very bullish. But so here we are, we're breaking 14-year highs. So I think it's very bullish. We reached $39 and change earlier this week. It's come back off mainly because I think the bullion banks, the swap dealers, if you want to call them, they're short quite a bit, and they're trying to fight the market. But I think we're going to continue to see the market move higher. They're kind of under control right now. But I saw, Elijah, that SLV ETF a few days ago, and it was Bob Coleman who posted this on X. Apparently, the bullion banks are unable or were at a certain day not to borrow the shares to go short. So things are very tight, and a lot of physical silver is being drained from the London Bullion Market Association, or LBMA. We are at very long-term lows in terms of inventory. There, I think it's only 155 million troy ounces. So yeah, the technical picture looks good. I think the next target could be in the mid-40s, and we could see that quite soon, I think. So the other thing is that silver seems to be now outperforming gold slightly, and that's always positive, not just for silver, but even for gold going forward.
No, you mentioned the LBMA, being drained of silver there. I've also heard that, silver is in a deficit, has been in a deficit for quite a few years now. And it's kind of been being masked, right, by above ground inventories that are getting drained. And it's not like we have an unlimited amount of above ground inventories of silver. So eventually, after, maybe I think I've heard possibly 7 years or so, after a little while, we're going to run out of those inventories. So if we continue to run a deficit, and it doesn't seem like demand will be slowing in any way, especially with the push for green energy and all that. So your perspective on the long-term situation for silver, it seems like prices have to go higher because demand is increasing and supply is we're not making enough, we're not mining enough each year.
Yeah, that's right. And I think the above ground inventory, you're making excuse me, it's more profitable right now to scrap silver because the price has gone up, but I still think it's not really that great. So that's going to push things even higher because, the deficits that the market has been running in silver, that will be negated in years, not in months, because there's not too many primary silver producers, and to start producing silver, takes time. As a silver mining explorer, it takes years to drill for the silver and then to get all the permits and everything. And then you've got the political risks, like in Mexico. Mexico is a big producer of silver. I saw recently that their government are not going to issue new licenses for I think it's open pit mining, or it could, So, the other thing, it takes a few years after you drill for the silver. You got to build the plant and then start processing. Taking it out of the ground. It takes 3, 4, 5 years. So the prospects, fundamentals are still good, supply and demand for silver. And on the other hand, I think silver has been capped down through the infinite amount of paper that the COMEX and LBMA create via their, it's called, I think Eric Young called it the COMEX LBMA exchange for the physical doom loop. And I think that's coming under pressure. So that will drive the price higher as well, because they're not really trading real physical silver there. They're trading paper. And eventually, when people really need the physical, they're going to have to cover their shorts.
You were recently on with Clive Thompson mentioning one of these times recently when it seems like a trader just dumped almost 500 million ounces of silver on the market in a very short time frame. And it's like, that's not what anyone would do if they were actually looking to get the best price. It seems like, overt manipulation at that point. And when we've seen that over the last few months, the price getting smashed down, it's recovered amazingly well. It hasn't really, the price hasn't continued down, which has would have happened in the past. But it seems like now we're seeing a lot of strength in the market, even when we see these hits by people who might be, trying to manipulate the market.
Yeah, it looks like the silver market has got a lot more depth in the past. I think it was last week they did that. It would have driven the market lower, and it would have stayed there for maybe days or weeks, and it was only a matter of an hour. The market came right back, and I worked as a futures and options broker for government bonds. I did trade a bit of commodities, gold and silver as well, but if I got an order from a client, a big order, the client usually used to tell me, please, I'll leave you the order and you work it because it's a big order. So I would sell a little bit every 10 minutes or so. I wouldn't go into the market and just dump everything because I'm trying to get the best price. So yeah, I agree. You see a lot of that, unfortunately. And I've been seeing that for over 20 years in gold and silver futures, because even though I didn't trade the futures in gold and silver that much, I kept an eye on it, and I would see these smashes, and it seems like now it's not happening as much.
And is the idea there, because it seems silly to just sell a bunch of silver onto the market and not having the intention of getting the best price? It seems like the only thing that makes sense is this kind of how it works. If you want to clarify for our viewers, that if someone dumps silver on the market, they then trigger other people's sales, and then they can maybe buy back if they're shorting, or if they can buy back at even lower prices. So they trigger that kind of avalanche of selling and then can buy back later. So they don't really care what they're getting for the initial amount, but they're able to then buy back later at a lower price and profit that way.
Yeah, that's right. Let's say a lot of these bullion banks or whoever's doing this manipulation, they know the key technical levels below, and they know that a lot of people are working what's called stop loss orders for their long positions, and a lot of times they leave them GTC, which is good to cancel. So let's say right now there's probably a lot of orders out there to sell if silver breaks, let's say 34.95, let's say, because just below that 35 level. So of course we're not near there, but if we were, you could see one of these big orders come in for a client. It could be even for a client, but the client doesn't care. They've made money, so they'll just just dump the whole order in, hoping that it would trigger that 34.95. The client will get filled. It's fine. They've made money, but then it triggers those stops, and the market continues lower, and you'll probably find out. I mean, I don't have proof that that client order was like the bank, whoever sold that for a client, they did that for themselves through another account. So they'll be able to cover it, let's say at 34.50, because it just goes through like a vacuum. Yeah, that's what's been happening. That's what happens, especially in silver, because it's a much smaller market than gold, but it happens in gold too.
And I guess it's good that it seems like the ability for people who are doing that to manipulate the price of silver down seems to be failing, given the amount of demand we're seeing.
Yeah, and I think the open interest, I haven't looked very closely, but yeah, the open interest on COMEX is dropping both gold and silver, which means people are more interested maybe in buying physical, and the demand for physical basically is outside the U.S., maybe more in India, China, and Russia.
It definitely seems like if there is a good amount of demand for physical from the public, that it's not in the U.S. right now, because interestingly enough, I mean, we're still seeing pretty depressed demand in the retail market here.
Yeah, I think it's because things like cryptos, Bitcoin, and even the NASDAQ and the general stock market, they've rebounded quite well since the dump we saw back in April. And yeah, it's taking attention away from gold and silver and the miners, even though gold, silver, and the miners are doing really well. But very few people outside the people in our circles, Elijah, know that that's going on.
Well, Mario, we really appreciate your time today. As always, if our viewers are interested in learning more, they can go to the Innecco 64 YouTube channel. You're also on Twitter. We'll put links to that in the description. Any last thoughts before we let you go? What are you paying attention to right now in your analysis?
Yeah, I think keeping an eye on the Japanese government bond market, the U.S. government bond market, and even the U.K. government bond market. And if those yields keep rising in the longer end, yeah, we could see some trouble ahead. It might take a month or two. Usually in the summer, it's a bit of we're in the doldrums situation. And then come September, October, that's when things kick off usually.
Well, Mario, really appreciate your time as usual. It should be exciting to continue to track this with you. Thank you so much, and God bless.
Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 14th through July 21st, 2025, while supplies last. This week, we'll swap any silver bars you have into junk silver at just a 2% fee. That's right, any silver bars or rounds that you have. We'll buy back at 2% under spot and swap into junk silver at spot with the proceeds. It's a quick and easy way to move from large quantities of bullion into junk silver at the lowest cost in years. To order our specials or any of the many other options we have available, call us at 1-888-815-4237. That's 1-888-81-LIBERTY. We're available after hours and on weekends, and we look forward to speaking with you.